Hey family, welcome back to the channel. My name is Matt. If you're new here, welcome. If you're a returning family member, thank you. Guys, remember to do all that fun stuff. Go follow me on Instagram. The link is down below. Go check me out over there. I appreciate every single one of you for checking this video out. Let's jump in. In today's video, we're gonna look over the week in the life of the Dow Jones Industrial Average. Now, this is a popular stock market index that has 30 blue chip stocks in it. A blue chip stock is a company that does well in good times and a company that does well in bad times. They're very large companies and there's 30 of them. If you want to see the entire list, go click the link down below. If you're interested in investing in this fund, it's a great fund to invest in. And today we're gonna go over a week in the life of the Dow Jones Industrial. Let's jump in. All right, guys, so there's Google trackers for each and every single stock, mutual fund index. So today we're gonna look over that on the Google tracker. So let's jump in, let's go to the computer and see what we got. All right, guys, here we are. I Googled Dow Jones Industrial Average. Now, first thing we see is the actual ticker symbol. This is the symbol that represents the actual fund on the stock market. Then we have the price of one share, $35,105.91. Today it is down 54 points. As a percentage, that's 0.16%. It's down today. So first of all, first things first, let's do the about. The Dow Jones Industrial Average, Dow Jones, or simply the Dow, is a price-weighted measurement stock market index of 30 prominent companies listed on the stock market or stock exchange in the United States. So the exchange that it's on is the New York Stock Exchange, the NAS, the NASDAQ. There's 30 companies. The market capitalization, the net worth of all these good old companies, is $10.84 trillion as of July 30th, 2021. Like I said, trading symbol DGI, or the other things. When was it founded? This is a great question. February 16th, 1885, 137 years old, guys. That's crazy. So 137 years, this has been around price-weighted index. Like I said, here's some other indexes we have down here. We'll go over those in the future. Like I said, we have overview, then we have news, then we have compare. So you can compare different indexes, which is kind of cool. Or you compare it to any custom stocks or indexes. So for example, let's do S&P 500. Like I said, you can compare them. They're pretty similar. Well, look at this. Wow. So the Dow Jones is the blue. The S&P 500 is the red. I've never actually done this before, but you can kind of compare them. And I think that's kind of cool because you can see the averages. They're pretty similar. Now, if we see the Dow Jones Industrial was a little bit lower than the S&P 500. Now, the S&P 500 is a little bit more diversified because it has 500, and I think it's 506 companies. It's so interesting that the S&P 500 has 506 companies, but it's called the S&P 500, not the S&P 506. Always thought that was interesting. Dow Jones Industrial has 30 companies in it. They're large, big companies. So yeah, guys. So like I said, Dow Jones was a little bit lower, and then but they're really equal. And that's 3 months. Then we can do 6 months, year to date. I love these charts, right? So everything's went down. The stock market went down because last year it went up like 30-40%. It was crazy. The mutual funds did everything. You made money anywhere. So what must go up must come down, right? So some years you're going to make a lot, and some years you're going to make a little bit or lose, 2 or 3%. But yeah, guys, here's the year to date. So it's a little bit down, but like I said, it's coming back up. It went down and it's up. It's a roller coaster. Remember, I always say the stock market is like a roller coaster. As long as you play out the ride, so you go up and down, as long as you don't jump off the ride, you're going to be great. You're going to be safe. You're going to make money. You're going to do great. We can do 1 year, 5 years, and then we got the max, which is kind of cool. So like I said, over time, it goes up, guys, as we see S&P 500 Dow Jones. This is kind of cool that you can compare them. I know I'm a big nerd. I like charts and graphs, and my favorite color is red, so the S&P 500. Maybe that's why I like the S&P 500 index more, because it's red. Yeah, but I'm just kidding. But they're both great funds. I think this is a great stock market investment. So like I said, I didn't even know you could do that. So you learn something new every day. Guys, try to learn something new every day. That's important. So like I said, compare. Going down today, that's fine. Goes up, goes down. Okay, now let's go back to the overview. So guys, we have the price. We have what it's doing today. We have the date, the time. I'm assuming it's Eastern time because that's, New York, Eastern time. So like I said, 1 day, 5 days. 1 day, it looks really scary. If you just look at the 1 day projections of like any stock, any mutual fund, any REIT, anything, it's going to go down. Or it's gonna go way up. It just depends. But like today it's down. But like I said, 5 days we got up. 1 month, it's been kind of wonky, you know. 6 months, whoa. Year to date, it has gone down a little bit this year, but that's okay. You know, like I said, roller coaster. 1 year, like I said, up, down. 5 years, ooh, look at that beautiful thing. Look, up, 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 and it just goes up. This, you know, was all that fun. So it went down here. Like I said, there it goes up, it goes down, it goes up, it goes down. Like I said, it's doing great now. You know, it was at what were we at? We were at $19,173.98, and now we're at 35,000, and that was from 2020. So guys, it goes up over time, and then max. This is my favorite, guys. Look, over a long period of time, it goes up over time. You just have to be slow and steady wins the race. You can do the more about it. Like I said, we have previous close, the day range, so what it ranged from in the day, the year range. We have a good little about section. You can compare it to other ones like we did earlier. We got some some stuff goes up, some stuff goes down. There's Apple and Amazon, Tesla. These are all single stocks. Then we have index. So we have index funds, you have single stocks, you have mutual funds, you have REITs, you have ETFs. They're all great. Oh, and then this is kind of cool. Google Finance, right? You have Europe, Asia, currencies, even cryptos on there. We got everything on there. It's crazy, okay? Yeah, so we can go market menu. Yeah. So this is kind of it, guys. Home. Yeah, so it's kind of a little cool setup. Google does a great job of this. But yeah, guys, so let's go back to the home page. So yeah, this is it, guys. It's not that super complicated, but you know, it can be overwhelming to people who are new, but this is a great industrial. So like I said, week in the life, you know, 5 days, you see what it did. It went down, it went up, it went down, it went up, you know, but it's went up. And, you know, you don't want to invest. You don't want to just be investing for a week though. You know, I want to do these week in the life videos of different stocks and mutual funds. It's fun, but you want to go longer term. That's how you win in the long term. You don't just go short term. Day trading is very dangerous, high risk. You want to invest steadily for a long period of time. And remember, I talk about it a lot. Dollar cost averaging, best way to build wealth over time. All that means is investing every single month. So just like you go to a bank, you save money every single month from your paycheck, whatever income you have, you do the same thing. You goes from the bank to the investment institution, it gets invested, you know, and then you have the Roth IRA, you have brokerage, all that fun stuff. So yeah, dollar cost averaging, very, very important. Yeah, guys, you know me, love me some charts, love me some all that fun stuff. It's very interesting to me. I know sometimes it's boring to other people. Like I said, you can make money over a long period of time. Slow and steady wins the race. That should be your investing strategy. Slow and steady wins the race. So important, guys. All right, guys, that's all for today's video. Remember to continually work to become the best version of yourself. And we'll see you guys in the next one. Peace.